Hey folks, in this video I want to simply and clearly explain to you what is currently going on in the United States stock market and the economy. If you are an everyday investor just looking to understand what's currently happening, a lot of crazy stuff is going on. Today represents the worst day. Today is March 10th, and it represents the worst day in the Nasdaq and S&P indexes since 2022. So it's a good time to check in. Before I do that, of course, I have to give you the fair disclosure that this is not for investment advice. This does not serve as a recommendation, merely just here to provide some information, to provide some educational resource. So if you have any questions, feel free to reach out to me at the end. But I want to give you three specific topics, okay, that we can think about in terms of what's going on right now. And then at the end, I'll also provide maybe three things that you might have a conversation with your financial advisor about to make sure it fits your plan in terms of how you're currently invested. Now, it's been a bad day for a couple days now in a row if we go back to last week. And if you're a long-term investor, the first thing I have to say is it really doesn't matter. Okay, I make this video, of course, to do a check-in. But if you are someone who's investing for 10, 20, 30 years down the road, this day could not mean less to you. But let me get into what's going on. So currently there's a lot of issues that are coming over from the economic side of things, right? And I always like to kind of split the economy and the stock market because they really are two different things. So when we talk about the stock market, that's mostly forward looking, right? So we're thinking about how Apple is going to do in the future. We're thinking about how Tesla is going to do in the future. We're trying to predict what companies are and what they're going to do in the future. The economy is much different. The economy is very present day in how we evaluate it. And it's even in the past. So if we think of a lot of common numbers that you see around the economy, it's going to be gross domestic product, so that's GDP, the consumer price index, which is going to be inflation. You're going to see jobs numbers, and this is just the government collecting a lot of data from the previous months and then displaying that to you, and that represents the economy more than the stock market. But as I just mentioned, a lot of times the economy can sort of bleed into the stock market, and that's currently what you're seeing right now. So the stock market hates uncertainty, and that's all the economy is providing to it right now. I'll get into it in a second with what President Donald Trump is doing, but that is one of the reasons why there's so much volatility going on in the stock market currently. There's so much volatility, there's really no sure answers. And while there's never a sure answer in terms of having a guarantee in the stock market, it is definitely a strange time with a new president, with all these new threats. Let's get into that second piece. That's going to be the tariffs. That's going to be the trade, and that's going to be a lot of the economic policies that are being thrown out currently. So a tariff is simply just going to be a tax on, it's essentially going to be a tax on you as the consumer. But when he says that I'm going to tariff China and Canada and Mexico and every country out there, it is meant to make it more fair. That's the word they're using, more fair for the United States in terms of making how we trade. So right now, obviously, there's a lot of threats being thrown out. April 2nd is marked as a date, as of the time of this video, when the tariff will start for a lot of countries. We keep pushing it back in terms of we, as in the United States. The third thing that's important to know, of course, is the bond market. So the bond market is going to be different from the stock market. As you know, a bond is different from a stock in that a bond pays fixed income, where a stock will either pay a dividend or people invest in a stock just for the unlimited potential. So a stock represents ownership, where a bond represents just loaning someone money. So typically, whenever there's times of volatility like there is right now, a lot of money does move from stocks to bonds. And when I say move, I mean people sell their stocks and they move to bonds for the safety. What that does is it lowers what's called the interest rate that a bond will pay you, because there's more people moving into it, right? So if I am trying to get people to give me money and I have to pay them interest for them loaning me that money, if I have more people to choose from, then I have more opportunity to pay them less for their money. And that's exactly what's happening in the bond market right now. All of that is simply to say, anytime that you see rates go down, and this is what you'll hear people talk about with the 10-year treasury, anytime rates go down, it's viewed as a negative for what they expect from the stock market. So as I mentioned, the economy is different from the stock market. Interest rates are different from the stock market, but the stock market is sort of like this big old concoction of things that are going on in the United States. And it's really going to make things volatile in the short term. In the long term, and this is why I mentioned at the start, it's important as a long-term investor to sort of just sound all this out. In the long term, what's most important is that you stay invested, and you stay invested in the right companies or in the right ETFs, maybe is a better word for it, because while we cannot say that history is going to repeat itself, we can use history as a good barometer of maybe what to expect. So as I mentioned, the S&P and Nasdaq have had they've had their worst day since 2022. I'm going to throw a couple of charts up here. The first one's going to be simply what the year to date has been. Then I want to show a chart that has a little bit longer timeline in it. So both of these will include over 10 years. And as you can see, they both have the simple observation by me, a PhD of noticing what's going on in charts, that they both go up and to the right. And now that's not to say that in the short term it'll continue to do that, or even in the long term. I can't make any guarantees at all. But like I said, history oftentimes does not repeat itself, but it does rhyme. That's a great quote that I stole from someone, and I can't name that person right now. So those are three things that are going on in why the stock market is behaving the way it is right now, okay? So a lot of uncertainty from President Trump in talking about tariffs and threatening countries and claiming to buy Greenland and doing a lot of things, and the stock market doesn't like uncertainty. So let me get into my 3 points of things you might consider whenever you have your next discussion with your financial advisor. So one of the first things that you should consider is, am I currently allocated in the right way? So am I invested too much in US equities? Am I currently holding too much of the US stock market in my portfolio? Am I invested in too many equities as a whole? Do I own too many stocks? Should I move more into something like an alternative? Should I move into something more like a bond, as I mentioned? Should I be more in money market than anything, right? There's a lot of options that you can have as the investor, and you don't have to invest in the US stock market if you don't want to. Now, history, as I mentioned, has shown that the person who has invested in the US stock market has fared better than just about anyone, including European markets, including gold, for all you gold folks out there, okay? It's not even close, so don't even try me. Anyways, consider your allocation with your financial advisor during these times, and it's just good to do that on an ongoing basis. Anyway, second piece is bucket of cash. Holding enough cash is very important, especially if you're someone in retirement. The reason is the worst time to pull out money, of course, is when the stock market is down. Now, again, if we zoom out, we're up from historical standpoints, but we just had some very poor days, so a lot of you probably aren't wanting to withdraw money right now if you need it for living expenses, and this is where your bucket of cash can come in. So this is money market. This could even be a high yield savings account, but this is just going to be money that you currently have invested in something that is very accessible to you. So that's always important. I know in past videos, maybe I've said that 3 to 6 months is a good amount of a working person to have. But if you're in retirement, you might even consider having closer to a year's worth of expenses. Because if we look back to 2008, the stock market has shown that it can have losses and sustain them for quite a while. So we do need to be careful with that. So the third and final thing that I simply want to talk to you about is having a financial plan, okay? And I know that is the most high level guidance ever, but having a financial plan goes much farther than knowing how you're invested, what you're invested. It's really about 5 to 10% of your plan is having your actual investments from a portfolio standpoint. So once you have your portfolio allocation, you've really only covered about 10 to 20% of your plan. There are much more important things to you, such as deciding how much you want to live off per year, how much you want to assume inflation to be. Do you want to spend more at the start of your retirement? Do you want to factor in healthcare? A lot of things that a lot of people don't consider until they sit down and actually have to start living in retirement is when they consider these. So I'm hoping this is something, of course, that your financial advisor has spoken with you about, but have a plan, okay? So a lot of folks get into retirement and they have trouble spending money, or they're not really sure how much they should be taking out a year. And these are all important things that you have to have planned out before, because when we get into the situations like we're currently in, this is where it's really nothing but a thing. Because when we have a plan, say we want to withdraw X amount per year, or if we want to withdraw a certain dollar amount a year, we're okay when these situations come up. And that's the main thing, is that you have peace in terms of your retirement. It's all well and good to have great returns, but at the end of the day, if you don't meet your goals and live the life that you want to have when you're retired, then all of this is for nothing at all. So folks, I have gone way beyond my time limit. I hope you stayed with me. If you did, I thank you very much. Feel free to reach out with me any questions you have. If you just want to talk about what's currently going on in the stock market, if you have questions about your retirement and would like to go over your plan, would be more than happy to do so. And you can contact me at the information here below. But as always, thank you for your time.